I believe gold is a crisis hedge. And I believe that gold has the potential, conservatively, to go to $5,000.
Please join us for our next live stream Sunday, June 21st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, June 21st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Our guest today, Kenneth Ameduri, Chief Editor of Crush the Street, a website with incredibly useful information regarding retirement strategies, diversification principles, and critical market updates and analysis. After noticing the cracks in the underlying financial system, Kenneth became a proactive investor, purchasing investments that would hedge his portfolio against inflation. This led Kenneth to invest in real estate, precious metals, stocks, and cryptocurrencies, establishing a personal multi-million-dollar portfolio prior to turning 30 years old. It's time to saddle up and silver up with Kenneth Ameduri, host of the popular YouTube channel Crush the Street. Kenneth, welcome to SBTV. How are you doing?
Hello, Patrick. Doing well. What an interesting time it is in the economy at the moment.
Absolutely. That's why we're glad we could get you on. Kenneth, you're a first-time guest on our show. Can we just start by having you share a little about your background and what was your motivation to start Crush the Street?
Yeah, well, it really came down to just this entrepreneurial spirit that I had at a very young age. And, I didn't grow up wealthy. I didn't grow up with a lot of money. But I guess I understood people. I understood, incentives. I understood motives. And I understood that when you give enough value and you don't take as much, you start to attract capital into your life. You start to attract people into your life. And it led me to entrepreneurship. It led me to business. It led me to investing. And of course, when I was very young, I really wanted to go out, invest in real estate. And I was graduating high school in 2006 when, we had that '08 crisis, went right into the crash and everything was blowing up. But I saw through my high school years, as I had the awareness of business and investing, everyone making a lot of money, or at least a lot of people that I was, attracted to and surrounding myself with, making a lot of money in the real estate market and stock market. And that's what I was like ready to do. But then things just kind of paused right there, in that '06, going into '07, the crash, and just watching everything blow up. And I had to go get, kind of a regular job, and I was going to college and whatnot. But it really led me down a rabbit hole of investing and just education, the problems with the system, sound money. And through my successes in investing, it led me to starting Crush the Street and sharing my journey with people. And that's what we do at Crush the Street. We share our investments with people and what we're doing and what's going on in the economy, what's going on politically as it pertains to the economy, because that's really where it is. And maybe we'll talk about some of that. But when it comes to the politics, I think a lot of the reason why it's so charged is because it affects us financially. And so that's where we're at. That's where we're at as a society right now, too. So that's what led me to Crush the Street. And, it's a great place, great community of people, and been having a lot of fun. Been doing it for over 10 years now.
That's pretty interesting. I guess you were placed on the right path. You're doing very well with that. Can you share with us your approach to investments and how you pick winners from losers?
Well, it really comes to looking at value, looking at the trends, looking at opportunities at the right time, and then also cutting your losers, because you might be right 50% of the time, 40% or 60% of the time, maybe 40% of the time, but it's really about cutting your losses and letting your winners ride. And you do that by just stacking the odds in your favor, right? You got to look at what is undervalued at the moment and heavily go in that direction. I mean, look at right now in the precious metals sector, for instance. I really believe that gold and silver are significantly undervalued, especially when you compare them to the overall equities, and especially when you compare it to the fiat money system, which is ballooning. So if you stack the odds in your favor, you got a good chance of winning. And so with that basic thesis, I mean, you look at the mining sector as an extension of precious metals. You're like, okay, well, this is a leveraged way for me to expose myself to the upside that I see in gold and silver. And then by taking it a step further, you look at management teams, you look at projects, you look at valuations. I mean, you really start to say, this is stacked in my favor. You invest in that. And if you're wrong, you're wrong. If you're right, you're right. But you start by giving yourself the best possible chance at success from the beginning.
Okay, it's good advice. We'll definitely get into precious metals in a bit. But can you share with us maybe one or two of your favorite investment stories, or stories that really stand out for you?
Well, I gotta say, when it comes to my investment stories, it's hard to beat Bitcoin. I know a lot of people, it's controversial. A lot of people hate it, a lot of people don't understand it. But Bitcoin is kind of like a 5-year-old LeBron James when you see him. When you look at 5-year-old LeBron James, you're like, wow, he's dribbling amazingly. He handles the ball well. He's got all this potential, but you don't know if he's going to throw a tantrum, right? So I really like that analogy. And when it comes to sound money and then coming across Bitcoin, it's hard for me not to get overly excited about what we experienced in 2017, watching that parabolic move that we had in Bitcoin and investing in it very early, and the thesis behind it, the disconnect, the opt-out from the government, the autonomy, the freedom, so much of what we love about gold and silver, by the way. I mean, it's an extension of it. So I love that about Bitcoin, and watching what we saw in November going into December of 2017. I mean, my goodness, what can we learn about that blow off top that we saw in a parabolic move in an asset? So I got to say, that was one of the most exciting things that I've ever invested in. And just witnessed, I mean, as a community, all the people that got behind it. And then I don't think it's over. I don't think we're heading in an opposite direction when it comes to Bitcoin. So we're going to learn a lot from that. I mean, I believe we're in a bull market in precious metals, and we haven't seen that blow off top yet. And that's what's going to be really exciting. That's what I like to compare different bull markets to, is to look at what we've seen in the past and what we can expect in the future here. And we might be in the 4th or 5th inning when it comes to gold and silver, but a lot of the time the gains come in the bottom of the 9th, and that's what we saw. So I'm really excited about that. We haven't seen it yet. We haven't seen the big payoff yet when it comes to gold and silver. So we're kind of in the middle of that trend right now, and I'm really excited about the stories that are going to be told here in the next year or two.
Yeah, totally agree. Speaking of gold and silver, what is the most important reason for people to own physical gold and silver today?
Well, we have a situation where the money supply is just exponentially growing, and we're witnessing the debt expand at rates that we've never seen before. It took over 200 years for the U.S. to rack up $10 trillion of debt, and then now we're in a situation where we might do $5 trillion, 50% of that, $4 to $5 trillion in 1 year. I think we did $1 trillion in 1 month. So, I mean, we're on track for just absolute chaos when it comes to the fiat money system. And so owning gold and silver is a hedge against that. And, gold and silver have been money for 5,000 years. And, in the 1800s, there was a little bit of a disconnect between gold and silver as money. Gold was for large denominations, silver conventionally for smaller denominations. And they started to use gold-backed certificates. So there was less of a need for silver at that time. So it's interesting. Uh, Silver, I actually believe to, do amazing with gold, but it's really because of gold. I believe silver to be that leveraged upside to gold that we are going to see, and that spillover from the investment demand that we are going to see from gold. And so gold is a crisis hedge. And it's kind of crazy, right, Patrick? If I would have described 2020 to you in 2019, 40 million people unemployed, 42% of jobs not coming back, trillions of dollars being spent, the world sitting in their house, home in quarantine. I mean, what would you have expected gold to be at, right? I mean, I would have expected $5,000 or $10,000 gold if you would explain that scenario. So I think it's still very early in the gold sector, and therefore silver as an extension. And so this is going to come home to roost. The chips are going to settle, and gold is going to move higher. This is the simple thesis. I believe that's going to happen. I think the odds are heavily stacked in our favor on that.
With all that's going on with the economy, do you think we've seen the worst yet?
No, I don't believe we've seen the worst because I don't think we've seen the fallout. We've seen it stitched along. We've seen it get bandaged. So, we saw basically a Great Depression happen in a month's time, 2 months' time, all these people being unemployed. But their reaction to that was a crisis management. And we saw trillions of dollars go into the system to inch things along. But that fallout hasn't fully been flushed through yet. People haven't experienced the inflation portion of this yet. I mean, we think there's a disconnect between the rich and the poor now. This is only happening to a greater and greater degree. Small businesses are going out forever and for good, but the big businesses are getting larger. I mean, we saw this massive injection of trillions of dollars go back into the stock market, and that helps the biggest Fortune 500 companies when you think about it, while the smaller businesses are getting crushed. So who's benefiting through this? And of course, people think that they're getting a $1,200 check. Oh, this feels great. Unemployment feels great. But it almost just appeases people when you think about it. So it's a slow grind. It's not just happening all at once. It's a slow grind. I mean, millennials are happy to live in tiny homes now. They're living with their parents longer and longer. And you can't put your finger on any one degradation to the standard of living because we all have our own lives and it's just our experiences, and you just don't feel it directly, I guess. Say, hey, this was because of Nixon, that reason I'm still at home or can't buy a car. But it is happening. It's degrading over time. And the political divide that we're seeing, it's crazy when you think about it. So, man, I forgot what your question was, but I went off on that tangent there.
It's okay. I think you're on a better tangent anyway. But we hear economists all over the place talking about recovery, and then we hear the other half. You mentioned the word divide. The other half saying reinflating. The Fed is reinflating these asset bubbles. Well, what's your take on this? Are we having a recovery, or is the Fed simply reinflating equities again?
Yeah, the economy and the stock market are completely divided. The economy is hurting. It's broken. People aren't getting on flights again. People. I think rental car prices are more expensive right now because people are driving places than getting on airplanes. But yet airline stocks are actually doing pretty well, pricing in future revenues that aren't actually going to happen. The real way I see the stock market right now, and we actually talked about this, in the crisis, is basically a hedge against the dollar to a certain degree. Now, I'd rather own gold and silver for that, but in relation to dollars, I do expect the stock market to go up, and that's what we're seeing. You own Disney or you own Delta, you own Apple. I mean, these are assets that are going to charge more money over time. And even if they're not, it's so disconnected. I mean, you saw this headline this morning. I forget how it went exactly on CNBC. If you want your stock price to go up, declare bankruptcy, right? Because you're just going to get funny money. I mean, everything's so backwards right now with our system. So when it comes to the stock market and the real economy, they're completely disconnected. And I don't trust it, but at the same time, I don't trust dollars. So you almost have to be diversified to a certain degree and expect things to not make sense. So the wealthy people, they own stocks, the hedge funds, the system is tied into the stock market, the pension funds, everything that we depend on as a society is dependent on higher asset prices. So there is this saying of not fighting the Fed and not fighting the system. You almost want to hedge a little bit with that and say, okay, there's a possibility that this is just going to keep going up in relation to dollars. I'm not in the camp that says, gold or the stock market, the Dow Jones is going to 5,000. I think in dollars, it's going to continue to be maintained. And even Warren Buffett, he kind of missed the bottom because he's trying to look at value, and you can't value these companies properly with what's going on with the Fed. So it's a lot of people are scratching their heads right now. I talk to managed money, and everyone's scared. They're not sure how to invest properly. And that's the reason why you have no choice but to be diversified, because we're literally in a casino when it comes to the stock market and holding, dollars and holding real estate. You can't even open a business without knowing what the rules are going to be. I mean, how fundamental is that? If I wanted to open up a restaurant in downtown Austin here, I don't know if they're going to shut me down. I don't know if they're going to, let someone throw a brick through my window and not prosecute them. And I mean, am I protected? I mean, I don't even know if I'm going to be able to make money tomorrow, but yet the stock market is ballooning. So everything's disconnected right now. And that's where we're at.
How much further damage do you think the riots will have on the economy that's trying to reopen?
Right. Well, I mean, there's a lot of conspiracies. If you look at what happened with the illness earlier this year and how the riots seemed to just completely take over. And I think there's a big political incentive to have lots of destruction, lots of chaos happen leading up to the election. I actually do think there's some truth to that. As far as the economy goes, the economy is in shambles in many ways. And I think that there's going to be endless efforts to just maintain it artificially. I mean, we heard Jerome Powell say that, we're not going to raise rates until 2022, I believe he said. He's not going to be thinking about raising rates. So we're going to do everything and anything we can to keep things going, even if it's not coming from savings, if it just comes out of thin air and gets thrown at the system. I personally believe there's going to be an announcement of probably the largest spending bill prior to the CARES Act, to probably get people back to work, to rebuild the country, rebuild roads and airports and bridges. We'll see about that. But I think there's a strong likelihood that they say, okay, we're going to take $5 trillion or something and, throw it at rebuilding the country. And that will string things along most likely, unless the system just ultimately implodes and, we get to the end of the Ponzi scheme. Nobody knows how much longer this can go on for. But it's you asked me about the damage. I think the damage is being done. It's just getting strung along by debt and manipulated interest rates and money getting thrown at the system. So the damage is here. I mean, if you were to price in the damage like a stock, the U.S. is bankrupt. The stock is worth zero, but that's just not where we're at. And also, we're the cleanest shirt in a basket of dirty laundry. So we also have that going for us too, because, if people had a real option, they'd just say, okay, well, the U.S. is finished. We're going to go to another country. But, the whole world is in this situation. So we're in this vacuum of a matrix, if you will. So that creates, ongoing sustainability that people need to factor in too. People just want to assume it's all going to end. It's all going to be just, blow up in our face tomorrow. But there's a lot of things. It's multifaceted. It's nuanced. And you need to be open to these things because that's the reason why stocks are going up. That's the reason why the dollar hasn't crashed. That's the reason why maybe, to a degree, gold and silver haven't gone up to where we think they will ultimately go. So be open to those things. I know we have our biases. We want to confirm our biases, and I'm with everyone on this. But just be open to the realities of things.
Yeah, I agree with you there. I mean, right now we're seeing, for lack of a better term, free money being given out, and we're seeing 40 to somewhat percent of jobs not coming back. So yes, I think as you're saying, we're going to see infrastructure jobs. Government is not only free money, but they're going to have to create, let's just call it free jobs in a sense. But where does it end? I mean, if the government is going to do these huge infrastructure projects and people are working again and this is what they're doing, where does it end? I mean, will the government just have to forever be creating government projects, new Hoover dams all over the place?
You know what? I would have thought originally that the end was the 2008 crisis. And then I looked at what we were seeing now, and I thought the end would probably be, the trillions of dollars that we're seeing thrown at the system right now. And so the simple answer is I don't ultimately know. But what you bring up an interesting point is like, what does the next crisis look like? What are we doing? The next time around the stock markets fall, we're at zero interest rates already. We're printing trillions of dollars. The Fed's balance sheet, what's that going to have to go to? We didn't even get to contract it since the last one, really, the last crisis. So 600 billion to 4.5 trillion. We went down just under 4 trillion and then ballooned it back up. I mean, we're not going up and down in this loosening and tightening monetary policy. We're just going up. So the situation is not going to end. It might just end with who has the most gold. I mean, there's rumors that China has 20,000 tons of gold. Maybe when it's all said and done and there's a scramble for the exits, he who has the gold ends up, with the wealth. So, and that's nuanced too. I'm open to that. I mean, we have a society here in the U.S., an infrastructure, roads, nice homes, certain geographical aspects about our country, which could be, an ultimate baseline for certain things. But it's so hard to say. I mean, I think it's going to be an individual crisis. I mean, for some people, this is the Great Depression. They lost their business. They lost everything they have, and they're starting at nothing. They gave it all up. Maybe they're in debt now. And this is their crisis. I mean, we're talking because we still have jobs and going, well, I wonder when this is going to end. Well, for some people, it already has. And their wealth went to, Jeff Bezos already. So I think it's a slow decline. We're going to see inflation creep into the system. Things are going to get more expensive. Rents. I mean, maybe home prices go up because of all this money. A lot of people want to say the housing market is going to crash. It's possible, but there's a lot of money in the system. So maybe home prices actually go up and it just gets more expensive for the middle class to afford a home, which already is. So I think it's happening. We're in the middle of the reset. People are losing their jobs. They're losing their retirements. They can't retire. How you used to be able to retire and get 7-8% pretty easily on safe returns out there. Now, we've seen hyperinflation when it comes to what you need to retire with. When you think about it, you need 10, 20x of a nest egg to be able to retire the same way you would have 20 years ago. So, it is broken. We're there, Patrick.
I guess, like you said, what is the next crisis? I mean, right now we're having sort of a market crisis, let's call it. Could it be a currency crisis? And if so, what would that look like?
Yeah. Well, I mean, it could be a global thing where it might be beyond the Federal Reserve. At this point, it's been contained by the Federal Reserve. But to keep people from opting out of every currency, it might come down to an IMF sort of thing, SDR sort of thing, and a good control on a global scale. And I think you look at what happened with the illness and this global lockdown that we saw. I mean, that was the first time I think I've ever seen the world act in unison in the way it did. And so it kind of was giving me a feeling like, wow, if something did happen globally, this breakdown, the system, there could be some sort of coordinated global control over the people to keep people from rioting, to keep people home, to keep people contained. But as far as what does it look like, the currency system, I think it might be a wild west until they do get some sort of control on it, which is why I want to hold gold, which is why I want to hold silver, because I think there's going to be certain things that are out of the control of those in power. When we saw the stock market crash, 2,000 points and the circuit breakers going, I mean, that was out of their control. Nobody expected that to happen, right? Trying to deal with interest rates and then just watching things go chaotic. When we saw oil go below zero and sell for negative $40 a barrel, that was an example of the markets breaking down and losing control. And for those people who don't think that's possible, I mean, these were just clear examples that bad things can happen. And so, yes, I mean, not having all your eggs in the conventional system in case that happens, the opt-out is gold. The opt-out is silver, in my opinion. And if you want to be more speculative, I think Bitcoin's a good place to be too.
Yeah. Okay. We'll touch on those in a bit. But just one more question regarding the Fed and central banks. Do you think they can save the economies worldwide, or are we at a point where we just may lose confidence in the Fed altogether?
The ultimate baseline for our livelihood is the desire to live tomorrow. And that's the ultimate baseline because, if we were just to look at what's going on, I mean, everything's dysfunctional. Yeah. But I mean, it's going to have to come from people saying, okay, how do we produce value? How do we make it work? How do we get by? But so it's not going to come from the Fed. It's not going to come from central banks. I mean, they're going to do things. And unfortunately, I think it's going to hurt the little guy. They're going to continue to do things that hurt the little guy. And so it's beyond repair when it comes to central banks. And we've seen it historically. It always ends badly, time and time again. And if you just look at the charts, we know that this is going to end. So it's beyond repair. It's a global issue. I think, unfortunately, a lot of smaller countries might get hurt first because people can opt out. Think about it. People can opt out and go somewhere else. There's an option, at least for the big money, and that's what you're seeing. I mean, China's pulling their money out in certain ways, or, they're buying Vancouver real estate or, real estate in the US, different places, or, if people feel like their government is failing, they can opt out and go somewhere. But when it all hits the fan and, a country like the US ultimately loses confidence, I don't think you go anywhere but finite assets. I mean, that's where it all ends.
How risky is it to have savings in bank deposits today, and how should people safeguard their wealth?
Well, again, it comes to that diversified basket that you need. People need a bank account to live. So that's absolutely necessary. But you don't want all your money in that. I mean, what happens if we have a situation like Greece or, Venezuela? I mean, this was one thing I didn't talk about in the intro. When you asked me about how things got started, my mom is from Argentina. She grew up in a hyperinflation. She's seen capital controls. She's seen hyperinflation. She's seen checks go worthless on her. And banks locked down her money. So, we've experienced a level of freedom and trust because we've never had to deal with it. But you go back to the 30s when they revalued our gold. I mean, that was a complete stripping of wealth from the people that happened. So, in terms of, am I worried about them, taking my money physically, nominally, I'm not overly concerned about that. I think they're going to do it covertly through inflation. They're going to print their way out. They don't need to take it when they could do it covertly, and with the mask of I'm helping you, and just like they did with the $1,200 checks. I mean, this is all inflationary. People think this is going to help them. It's all inflationary to stitch things along. So I'm not worried about them taking money out of my bank account at the moment, but I could change my view on that.
You touched on precious metals. Are you more favorable towards gold or silver at this moment?
So my thesis on this is I believe gold is a crisis hedge. And I believe that gold has the potential, I mean, conservatively to go to $5,000. If we look at what happened in the '08 crisis, there was about $1 trillion of stimulus, and gold went down 25%, got to like 680, and then went to $2,000. This time around, we're like at what, $7 trillion of stimulus at this point. So in theory, we could have 7 times what happened in the '08 crisis happen to gold in 2020. But, just saying it does what it did in the '08 crisis, and we don't have just hyperinflation and everything happen, gold can conservatively go to 5,000. And that's with all of the trillions of dollars that are being put in. Just doing what it did, from like 2009 to 2011. And so because of that, as an extension and as a maintenance of the gold silver ratio, I think silver has explosive upside. It has a historical precedence of being money. I mean, sure, 50, 60% of it right now is used for industrial. It's a small portion that's used for investment demand, but it's a very small market. It's Niagara Falls going through a water hose when we have a real crisis. And again, that spillover from gold going into silver, I think is going to be absolutely huge. We have, mine supply disruptions, decreases going on for the last 4 or 5 years when it comes to silver. And so the leveraged upside that I see in silver is much greater. I think sometimes it's a little bit more inconvenient for someone who's super, super wealthy who wants to invest hundreds of thousands of dollars to just buy silver coins and put it somewhere. I mean, you need to have it stored and whatnot. So I think that's why a lot of times they just go into gold for larger denominations. But I believe that the leveraged upside is, in fact, in silver. I mean, just to get back to $50, we have over a triple-digit move in front of us, 150% move in front of us. Plus, but if we see gold go to 5,000, I mean, $100 silver is easy. I'm not even trying to make some overly calculated projection on this. This is just simple probabilities, inevitable things to happen. So if you think $100 silver is great, well, you can conservatively expect 50 and be happy selling there. And I'm not even telling people to do that. But, if you look at where it is now and you want to invest with the inevitables, silver is a great place to be if you're open for a little more volatility.
Okay. And we touched on this also, where there are some in the precious metals community who do not look or even like cryptocurrencies. Mm-hmm. And both assets have also been compared and has fueled much precious metals versus cryptocurrency debates. I think a famous one was Peter Schiff and Max Kaiser. Mm-hmm. But how do you view cryptocurrencies and how do they compare with gold and silver?
Yeah. Well, it's an interesting thing. Cryptocurrencies as a whole, I mean, there's so many baskets of what they do. There's so many of them that are different use cases. And, they're almost like individual stocks, if you will, that have, completely different business models. But Bitcoin specifically is a sound money purpose. It's for transacting. I mean, it's the Visa network and the properties of gold mixed into one. And, it's competition to money, right? And competition, as you know, in the free market is healthy for efficiencies and productivity and for effectiveness, for things to get better. Capital will flow where it's being treated best. And especially with what's going on with the fiat currencies, having these competitors to the dollar, I think is very healthy. So I think gold and silver, Bitcoin is an ally. I know it kind of stole the limelight in 2017. I was talking to bullion dealers and they're like, you know what? A lot of people are selling their gold and silver and they're going to Bitcoin. I think that was a shorter term thing. I mean, it's just like we saw with gold and silver selling off during the crisis here in March and then settling higher. I mean, I think the story is still yet to be told. I think Bitcoin is an ally to gold and silver, and it exposes the fissures that the current system has. If someone wants to opt out of Venezuelan bolivars, it's kind of hard to do it in the current system. I mean, there's a lot of capital controls, but they can buy Bitcoin, they can get on an airplane, show up in France, and have all their wealth with them. So, if you wanted to pull the plug on the system and you're in an area that's highly dangerous economically, you can do that. And the government doesn't have that power over you. And when that happens, of course, people are going to be looking for hard assets. So gold and silver are going to be a beneficiary of that. And the more we have, the more tools we have to be free, be autonomous, and not have that counterparty risk, the better that is for everyone. That's what I believe about that. There's $40 trillion of offshore banking. I mean, that's roughly what the value of offshore banking is. Bitcoin's what, $100 billion market cap, $200 billion market cap. It's so small still. It's so early. There's a lot of money on the sidelines that will eventually settle into Bitcoin, in my opinion. And I believe that to be true. The longer it continues to prove itself, the more people can trust it, and it's just self-fulfilling. So, to the degree that I believe that it's going to be around in 10 years and stronger than ever, I think that's going to reflect in the price. I think we're early in that stage, and I think it's going to benefit gold and silver as it exposes the problems in the economy.
How about a combination gold-backed or silver-backed tokens? Do they bring something useful to both precious metals and the crypto communities?
I think it brings awareness to crypto. But it really doesn't have, it's not the same purpose. It's not Bitcoin equivalent. It's owning gold, which is great. Owning silver, having that trackable link, being able to own, like we talked about the problem of owning lots and lots of silver. You can own a crypto backed silver token and just trade that and own it. And I think that's a great way, because the blockchain is a great way to trust who you're working with. It takes out the counterparty risk, and it's helpful because it gives people a way to own gold and own silver, and maybe people that would own it that never would have before. Yeah. So I believe they're allies.
Okay. Kenneth Ameduri, can you share with us more about your website, Crush the Street?
Patrick, thanks so much for having me on the show. Appreciate you. Appreciate everyone here for listening. If you want to learn more about me, I'm just at crushthestreet.com. We write regularly there. We post regularly, and I interview people as well. So visit me at crushthestreet.com.
Okay, will do. Anything else you'd like people to know?
I just want people to be open to being wrong. Open to different ideas, and not preaching at people like, oh, I'm right and everyone else is wrong, but just the idea that our biases that we might have might not be exactly the way things are going to play out. So I can tell you, having that approach has made me money because I've been invested in things that I knew there were risks in. I knew that there were possibilities of it failing, but going, well, there's a lot of reasons, and I think there's going to be more buyers than there are sellers. And because of that, this went up. I mean, look at Amazon, for instance. Amazon went from, it's never been cheap, right? It's always been expensive, and it just keeps going higher because it's a media darling, and they're just continuing to do what they do. So people have been on the sidelines on Amazon for years and years and years. I was one of them. And so that was one of the moments where I would look and say, you know what? You just have to be open to being wrong and accepting the facts for what they are. And I think moving forward here in 2020, if people can start to look at the bigger picture and try to disconnect from their biases, they might have some better luck retaining their wealth and growing their wealth in 2020 and beyond.
Okay. Kenneth Ameduri, great words. We appreciate you coming on, and we hope we can do this again sometime.
Thanks, Patrick. Appreciate you.
That was Kenneth Ameduri, the chief editor of Crush the Street. For more of his insights on critical market updates and analysis, please visit his website, crushthestreet.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.